Good afternoon, morning, evening, no matter where you're at in the world today. As always, today's topic revolves around lending, which I work for a company called TurnKey Lender, which is involved in that business, and I also have about 10 to 15 years experience in the space. And so what I try to do here today, my camera's up on top of my screen, so if I'm not looking directly at you, it's because I'm also 51 years old and Gen X, and I still write things down in my book here, which we'll get to the Gen X and the generational thing here in a little bit. So I'll try and speak to the camera as much as possible. I also want to say that I really try to be respectful of everyone's time. I have a tendency to speak a little fast, and we're totally, open to anybody out there that wants to ask questions, wants a no hype, no pressure sales experience. You can hit me up on LinkedIn. I'll respond personally, and we'll get you set up with some explanations and or some answers to your questions, particularly around use cases, because this is really meant for two different types of folks out there. Number one, those folks that are already doing lending or in the process of launching their lending business, and then for those businesses out there that are curious. And that could be somebody interested in embedded lending, meaning that they would embed a lending product within their company to give them a differentiated value prop. So really written for both of that. So let's start with the lending industry because, we're seeing some interesting market conditions, particularly here in the U.S. We obviously have a global situation that is dire and horrific, and is going to have repercussions for the next decade. And so I know a lot of folks, as they think about entering new businesses and or investing to improve their own, they want to have some comfort level around those businesses. And quite frankly, there's not a safer business that you could be in today. Lending in the United States is about a $9.5 trillion business. That's both about $8.5 billion in commercial lending, which is business lending, about 1.5 trillion in the consumer side, and I hope my math adds up there, but you get a good point. As it relates to North America, in particular in the USA, we've traditionally lagged the rest of the world. I had some colleagues of mine when I worked at a large financial institution, give a shout out to the folks at Mr. Cooper, and she would return to China every year, and I worked there about 5 years, about 10 years ago. And every time that she would come back from China, she would tell me that, in China, people don't use paper money. They use their mobile phones to transact and bank and to basically move money around and to do just about everything. And so the United States was really lagging behind. There's a couple of things that I think are rationales there. Number one, we still have a fascination with cash in the United States. That the dollar is kind of the generally accepted currency globally, and particularly for some generations, the idea of cash and being backed by the good faith of the U.S. government and having that printed on that cotton piece of paper really gives them a sense of tangibility. And one of our largest generations here in the United States, roughly those people between 55 and 73 are 71.6 million out of the 350 million or so that we have here in the United States. And so traditionally that generation doesn't trust tech, is slightly distrustful of the internet, and by the way that it's been abused in many ways, I don't blame them. But at the same point, COVID changed all of that, right? Like nobody wanted to go to an ATM machine and be touching cash that potentially had some sort of contagion on it. And so we, over the last, since 2020, have just accelerated so quickly in terms of using money through the mobile device. Years ago, would have you considered that your grandparents would be paying a babysitter using Venmo? Well, no, now they do. Hardly anybody keeps any cash anymore. And then also, like, you got to think that any business that isn't website forward is just basically not going to be in business in 5 years. So that's the truth. And if you look at like market valuations for like companies like traditional brands in the consumer segment like Macy's, et cetera, nobody's asking them, about their top line revenues. They're asking them about how much they're transacting online, what is the lifetime value, what is the ticket price, et cetera. Also, mobile phones and smartphones are basically ubiquitous, and so everybody has one. Everybody's using one. Different levels of capability there, obviously. So basically, this generation went from 0 to 60 in terms of using tech and money, and obviously lending plays an enormous role in that, with 9.5 trillion being transacted. I also want to say another thing with markets. It's really kind of recession proof. People's use of credit, either as a business or a consumer, don't change with interest rate fluctuations. It typically just means that different cohorts of the population access those loans or need loans. So whereas a certain income group may need those loans at a certain interest rate, or when a market's kind of at a certain level, as 12% of Americans have a personal loan. A lot of that is to reduce credit card debt or high interest debt, but a lot of that's also to do home improvements, and a lot of that's also, there's some studies that the average, not the average, but that people that make over $100,000 a year, I believe Elevate published this, actually do use like payday loans in terms of bridging certain payment gaps at certain times, even up to that income level. So the good news is this is all an opportunity no matter what. So let's talk a little bit, and I would say it's like, it's not a nice to have anymore, it's a necessity. So that's kind of laying the groundwork as far as digital and tech and money. Let's talk a little bit about the millennials, 26 to 41, 92 million of them. Gen Z, 10 to 25 years old, 86 million of them. And Gen X, which I'm right in the middle of, is 65 million. And so that's 243 million out of 350 million folks in the US. That's 66%. And 22% of the total population classify their smartphone as the last bill that they would ever not pay. And so you can imagine folks would forego a home payment and or forego a car payment in lieu of keeping their phone. So no matter what the situation, people will be able to transact through their phones. And you can think of it, they may not have a car to be able to drive to a retail location, but they can always transact through their phones. So now let's talk about the current lenders and those that are curious getting into digital lending. So number one, I want to talk about frictionless transactions, because that's what true end-to-end digital lending is about. Embedded or digital lending, it's customer-centric and it's delightful. So for anybody out there focused on customer-centric product, there's nothing better in terms of improving your end user's experience than end-to-end digital lending. And let me give you some examples of who those end users would be. Those are hospitals that are buying CAT scans and MRI machines. So they're doing embedded lending and borrowing money from the actual companies that manufacture those devices in order to secure them. If anybody's bought a car recently, like gone are the days of sitting down with the finance department for an hour and a half to be sold gap insurance, et cetera. Now it's all frictionless and it's all online, and you can literally not have to speak to a human being except when they drop the car off and have you sign the paperwork, which everybody prefers, to be honest with you, in many cases. Selling consumer goods, this could be, really any product. I mean, the buy now, pay later is obviously taken off, but if you're a manufacturer of the product and or a retailer, and you're selling, $500 to $2,000 purchases, building customer loyalty with your customers as opposed to selling them off to a third party like a firm, may make sense in terms of building relationships and loyalty with those customers. We get a lot of interest from community banks and credit unions that just quite frankly, nobody's going to the branch anymore. So how do you cross-sell? So they need to be website forward, and they've all are beginning to understand. I think it was the first time that banking listed digital lending as the number one consideration for this year. my God, it's been around for a decade, and they just barely getting around to saying that that's a priority. And the good news is that there probably isn't a priority because they think it's going to cost millions of dollars and take years to do, and that's all rubbish. So, and also you could be a direct selling company. We have a direct selling company that does high-end products, and it's a differentiated a value prop to be able to offer lending, and or a current lender. Like think about some of the current quote unquote digital lenders out there. They've been around for like 10 years. Their tech is built on old platforms. Many of it's Frankenstein type technology linked together, and folks are still using Excel spreadsheets, which I'll get to that, which just like blows my mind. Right now, the top 50 banks own about 68% of the SMB lending market. I suspect that will be 25% by the end of the decade. So any of you that are curious, any of you that are currently lending, that's enormous. That's trillions of dollars of opportunity to basically take away from what the traditional lenders and the large banks have been doing, or for those large banks to retain and to be the leaders in those spaces by getting their ships right and diving in on digital lending and providing a customer-centric experience and stop relying on the past. So what is lending? We break it down into two categories. So that's another side of this. It doesn't have to be like super scary and confusing. That's what like the traditional big banks have tried to do in many cases, is to scare people into thinking that it's complicated and that it should only be reserved for the few. We are at the border of democratization, if not firmly planted in the democratization of the access of credit and finance globally, and in particular in the U.S. And that's not being negative to the big banks. It's saying to them, we're here to help, and we're here to help them to be more successful, because a lot of people have their deposits in those banks, and we want to make them successful, because when they're successful, we're all successful. So let's talk about business lending. That could be merchant cash advance. That could be advancing cash against a point of sale so that they can do improvements and manage their business and cash flows through different periods of time. SMB installment loans, revolving credit, invoice factoring, and supply chain factoring, all e-commerce focused, right? We can help to make that all e-commerce focused. Or provide that experience within a retail location. So if you're a cosmetic surgeon, you can send an SMS and have somebody apply and be approved for credit by the surgeon themselves, or the holding company, or the private equity firm backing the holding company, and be able to provide that credit to them directly, so you're not selling them off to a credit card company like Care Credit sells off to Synchrony, and so then you just lose your customer, and that's a portable credit at that point. So they can go use it somewhere else. So you just took a hard-earned customer and you just sold them off. On the consumer side, embedded finance, embedding like Target, Amazon could all offer their own buy now, pay later platform along with the other providers, but could make sure that they are building loyalty with certain segments of their population, and being able to do research with those customers to identify ways in which they could become more customer-centric. And also own the customer relationship for a lifetime, right? Buy now, pay later on a retail or offline. And then one that's really hot is home improvement, because no banks are doing HELOC loans, because you have to balance sheet in equal proportion to the amount that you're lending out, and they don't make any money off of those loans, and they're just a big risk. And so most home improvement loans, and probably out there for the population, do you know of a single person in your family, friends, or your sphere of influence that isn't doing some sort of upgrade to their home right now? Well, they're all doing it through active borrowing and lending. So let's talk a little bit about what digital end-to-end lending is, and this is where I'm going to do a selfish plug for TurnKey Lender. Prior to TurnKey Lender entering the U.S. market in North America in 2020, really there was no digital end-to-end solution. There's a lot of really good lending management systems out there in the marketplace that you should take a look at, but most of them focus on specific areas or only specific verticals. And so with TurnKey Lender, we're open for all businesses around those 7 product sets, which cover about 60% of any type of lending that you would want to do. And so we don't believe that it should be reserved for a select vertical. And we also don't believe that we should only do one part of the overall lending process, which I'll highlight a little bit later. If you are lending or want to lend, what was available prior to Turnkey Lender was that you had to patchwork together a bunch of outdated software. And when I say outdated software, remember, a lot of software is built so that they do updates every quarter. And in today's market, a lot can happen within those 3 months. And if you have a problem with your system or you need a button turned red from green, normally you have to send an email to the help desk and they say, we'll put it on our product roadmap and get back to you in 3 to 9 months. By that point, some sort of regulation or compliance matter could have changed, or a new opportunity for you to lend in could have changed, and you're not able to take advantage of it because you're beholden to them to make the adjustments to the software as far as hard coding it. And our platform's a no-code system, so anybody with SQL experience in your company can run the product absent of us once we've installed it. So we don't expect that you should we should create a dependency upon us to allow you to grow the product as you see fit. And for product teams out there, oh my gosh, you can do MVP testing, A/B testing. You can hook up all your different marketing analytics and ad tech, and you can really refine and understand everything about your customer experience and really build beautiful products that delight the heck out of customers in the end. By the way, I did mention the Excel, the fact that they're still using Excel, and that's about 50% of the lending space right now has some dependency. Excel was invented in 1985, and I graduated high school in 1989. The top hit on the radio was "I Want to Know What Love Is" by Foreigner. Most of you out there in some of those other generations have no idea what Foreigner is. So, and for those of us that do, harken back that was a heck of a long time ago. The fact that we're still relying on that type of software to update amortization schedules, and the fact that there could be human error in terms of a fat finger that could completely mess up your whole lending platform, that just is completely unnecessary anymore. So misconception number one is that the big banks are ahead of the curve. They are not. In fact, they're actively looking to play catch up and to get ahead. And we're super excited about talking to several large banks right now because we know we can make them super competitive, and we know that they play an enormous role in society and in our economy. And if we can help them, then we're helping millions and millions and millions of people. And so that's a pretty noble thing to be doing. Misconception number two: lenders or those curious about lending think it costs millions of dollars and multi-years to get it right. I used to work in a large corporation. I know the trepidation of the C-suite or the board of directors in terms of making multi-million-dollar investments. That usually takes about 1.5 years to make those decisions because they're terrified of the fact that it's going to be multi-year deployment and they're never going to get time to value. And so when you're looking at different lending platforms, you want to really stress the time to value. And at Turnkey Lender, we try to focus on being able to keep the sales process to 6 weeks or less, and to be able to deploy in 3 months to 6 months, which allows you to get to time to value off of that investment very quickly. And in fact, you could build a firm on Turnkey Lender's platform in about 6 months for under $1 million. So that's how quick the evolution has happened. And don't let anybody else tell you that it's gonna take multi-years and millions of dollars. So what is end-to-end digital lending? For those of you out there, number one, and these are the questions you need to ask if you're interested in getting into digital lending and you want to talk to some of the competitors out there in the marketplace, which I strongly suggest you do. A lot of good players out there. Don't have anything negative to say about anybody in the space, particularly trying to help folks to get access to credit and to minimize risk for the business and to help to grow this our economies here in the West. So number one, application. Can you design a graphical interface or user experience that closely mirrors your brand? Can your product and marketing team actually develop that user experience in-house? Absolutely. We have a tool called FlexGUI, or we can use whatever systems you have in place. So ask them about the flexibility on the application side, and then it matches your brand or your soon-to-be brand. And then AI decisioning. I can't even. I may do a whole LinkedIn on this, but so a little bit about AI. Everybody uses the buzzword, and half the people don't know what they're talking about. You can't have really solid AI until you have years and years of data points going into the artificial intelligence to make the machine learning work. We've been in business since 2016, and we've been processing billions of transactions, and our artificial intelligence is exactly that. It's intelligent. It's smart. You can't just drop out of Harvard or drop out of college and go hire a PhD, a couple of PhDs, and start claiming that you're great AI. That's complete rubbish. It scientifically doesn't even make sense. So you're only as good as the inputs, and so you want to work with a company that's got a lot of quality inputs and has a lot of success built into their AI. You also want to have it be able to be explained in simple terms, and from clustering and all different types of analysis, so that you truly know that you're dealing with a professional. In our case, founder of our company, PhD in artificial intelligence, modeled it more after like neural networks. So doing artificial intelligence for lending is kind of intellectually a step down. And we've been doing it for a long period of time and have the absolute best model. Also, the number of inputs. FinTech has expanded so much that you can input so much into the decisioning model that you can minimize your credit risk to almost nothing. And so if you're securitizing your loans into Wall Street, you can start to increase your credit ratings, your default rates go down, and it's a super safe way of doing business. Then you have the documentation. Can you create, end user portals to where all documentation can be managed so that you don't have underwriters calling and texting people trying to chase down W-9s and tax reports and or banking statements and trying to make sense of them all. And in fact, like there's middleware out there that links with all the major accounting software, so you can suck in 2 years of accounting data, normalize that data, do a chart of accounts and a projection for that business 2 years ahead, so you know exactly who you're dealing with, and you can make your underwriting file that much better. And that's how we approach it. But also creating very simple user experiences for your end users so that they can quickly digitally upload through their mobile device. They don't have to jump through a bunch of hoops to try and get their file filled out. And then you have servicing, the ability to send out statements, to be able to do amortization calculations if somebody pays double payments in a month. All of those types of things need to be automated so that you don't have people using Excel trying to update an amortization calculation and making a mistake. Then there's the collections component, providing all the different means for payments, bank transaction data, through banks, through all this different payment technology that's really taken the 4% or 400 basis points that it used to cost to do a credit card transaction and is minimizing that down to, sub 50 basis points. End user has a better experience because it's frictionless in terms of paying. And then on the back end, the company is able to collect and gain margin off of the overall payment and not be paying 3.5% to the credit card companies. And then things that you must ask your potential lending partner, loan management system, end-to-end solution provider. Do they not do every aspect of this, and is it all not completely fluid? And then are they empowering you with the tools to be able to do it yourself? So with us, there's 3 tools. There's FlexGUI, Configuration Manager, and Flow Builder. And it's easy as drag and drop in terms of building a lending platform. It's similar to like running AutoCAD. If you know how to work AutoCAD, you can design a library, bridge, a building. But in our case, you hit the go button and it actually builds the building right there within the software. And you can obviously also, there's a lot of testing. So if you're a product focused person or professional out there, or your company is looking to be customer centric in terms of your product development, the system's so flexible that you can truly understand what the customers want and their experience. So, whether, if you ask yourself the question, should you be in digital lending? If you're a lender, do you need to upgrade? Do you need to get modern? Do you need to stop messing around and dealing with old Frankenstein technology and creating risk for everybody and reducing your margins and costing your company huge amounts in OpEx? It's an emphatic yes that you need to get in contact with the digital lending platform, end-to-end, no code, modular. And then if you are thinking about getting into digital lending, I hope it's an emphatic yes that you should consider it. I can show you how you can get away from some of those concerns that may come from the board or your executive committee, because remember, at the end of the day, we all have a boss. And we want to find those folks within companies that are looking to be the all-stars, the next CEOs. And the best way to do that is to create a profit center within your organization and create customer loyalty, retention, reduce OpEx, and increase profit margins. You do that, you're on a career trajectory, and at the end of the day, your company is doing great work and satisfying customers the way that we want to be. So you're doing good work for your customers. So number one, just think about it. Your business is the website. Stop thinking otherwise. Number two, with digital lending, you can improve profits, the number of accounts booked. You can increase the lifetime value of clients, improving margins, and avoiding and creating profit centers. Increase your customer pool. Right now, you may be focused within some of those segments between millennials, boomers, or over-reliant on Gen X and boomers and trying to get into those other segments. So now you can expand. You may be focused in those areas and want to expand up generationally. And so this allows you to expand your overall TAM and to reach new markets. And then I'm going to say it 3 times: retention of your customers. And then product market fit, customer-centric product development. Number 3, decrease operational costs for current lenders and the folks that want to get into it. We can do simple cost-benefit analysis and time to value that makes it a super easy decision at the C-suite. Compared to almost any other type of software that you would be purchasing, we can do that analysis because it's inherently built into the product. And so when we talk about deploying a lending software, you're talking about increasing profits, period. You're not talking about automation to improve maybe this process that in 5 years you may see some net benefit. No, with us and digital lending, we can show you ways that you can do immediate cost benefit analysis and be driving profits. Automate the application and review, replace paper and visits, so decrease friction with customer. And then on the other side, decrease friction within your own businesses. And everything is secure. It's a secure online exchange, and that's been vetted out for years. Fraud, everything else, that's like a thing of the past in terms of that's always been solved for. So you don't have to worry about it. We just have to show you how it's been battle tested. And then use your omni-channel marketing to accelerate overall response time. And if you hit me up on a LinkedIn, I'd be happy to share with you use cases, give you some examples of what those percentage increases are. But it's literally like going from 4 weeks on a loan and creating a horrible, terrible experience, awful in many cases, to 3.1 seconds to decision on a lower risk customer, increased margins, and delight in terms of the entire experience. So I really appreciate y'all joining me today. I've tried to be respectful of your time. We're at 29 minutes and 8 seconds. And so I've kept it to 30. And once again, feel free to reach out to me on LinkedIn. Feel free to hit the TurnKey Lender website. That's www.turnkey-lender.com. The chat bot will probably pop up. Frank will be over there. He'd be glad to help you. Great guy. And we look forward to the next LinkedIn event. And have a great day. And spring is sprung. So have a great day and a great week. Thank you.